Hello everyone, this is Gracie here. In this video, we'll be discussing when goods are sent at invoice price with abnormal loss. So Nishant of Mumbai consigned 100 radio sets costing rupees 500 each to Ramesh of Bangalore. The invoice was made pro forma at rupees 600 per set. So cost price was 500 and the invoice price is at rupees 600 per set. Ramesh was entitled to a commission of 7.5% on sales. So here Ramesh is entitled to a commission of 7.5 on sales plus 2.5 delicate commission and 10% of the surplus sale proceeds. When will surplus sale proceeds happen is, so now Nishant is a consigner who is selling the goods at rupees 600 at invoice price. So what is the cost price? 500. So if he is sending the goods to the consignee at rupees 600, he should say, when he is making an attempt to sell the goods more than 600 rupees, he will get excess amount, isn't it? So if he is selling at 600 rupees, then 100 radio at rupees 600, he will be getting 60,000. Suppose he is selling it for 65,000. That what is the excess? 5,000 is excess. On that 5,000, how much ever he is selling at higher price, that excess than the invoice price, that excess amount on that 10% will be calculated as the extra commission what he will be getting for the surplus sale proceeds amount. Ramesh was to bear all expenses incurred after the goods reached his godown. So Ramesh is the consignee who should bear all the expenses after the goods reach the godown. While sending the goods, Nishant paid rupees 1,500 as forwarding charges and insurance in transit. 10 radio sets were damaged and Nishant received 4,000 from insurance company. So while sending the goods, Nishant is paid 1,500 as forwarding charges and insurance in transit. So Nishant is paying. So it is his expenses, forwarding charges and insurance in transit. Then radio sets were damaged and Nishant received 4,000 from insurance company. So it is abnormal loss. When you receive any money from insurance company, then it is an abnormal loss. So in transit, it is damaged. So it is obviously an abnormal loss, which is 10 radios. Ramesh took delivery of remaining radio sets by paying 4,500 freight, which is non-recurring. Cartage, etc. Ramesh sold 70 radio sets at rupees 800. So out of 100 is selling only 70. Okay, out of 100, 10 is damaged. So if 10 is damaged, the remaining 90 should be there. Apart from the 90, is selling 70 radios. So you will have closing stock. So you need to calculate closing stock value. Then 30 of them on credit basis. So he's selling it on credit basis. That is why delicate commission is also given, which is 2.5%. Out of which proceeds of 3 radios could not be recovered because of the disappearance of the customer. So when is delicate commission given? When he is bearing the bank debts. So here there are 3 radio sets which were sold and the money for it is not given by the customer. The customer is absconded. So for that 3 radios, whatever is the expenses will be bared by the consignee. For bearing that expenses, consignor will be giving him 2.5% as delicate commission. So here he had spent rupees 500 as storage and selling expenses. Ramesh sent a bank draft for the amount due to Nishant. Prepare the important ledger accounts in the books of both the parties. So you are asked to prepare ledger accounts in the books of both the parties. So now first let us draft the calculation of closing stock. So now the first is calculation of closing stock as well as to find out abnormal loss. The goods sent on consignment at rupees 500 and rupees 600. So we are going to show quantity, cost price and invoice price. Why we are dividing it into cost price and invoice prices? Abnormal loss will always take the value of cost price. It will not take the value at invoice price. That is why to find out what is our abnormal loss, we will divide into cost price and invoice price. So goods sent on consignment 10 100 quantity into 6 into 500 will give you cost price, into 600 will give you invoice price. Add non-recurring expenses, forwarding and insurance, which is 1,500, both the sides you will add. You will get a balance of 51,500 and 61,500 at invoice price. So with that, you will minus abnormal loss. As abnormal loss is not there, it is nil. But you have no, I'm sorry, your normal loss is not there, so it is nil. You have abnormal loss, which is 10 units. So you will calculate through cross multiplication. For 100 units, if it is 51,500, then for 10 units, how much is it? You will cross multiply. You will get for at cost price 5,150, and at invoice price you will be getting as 6,150. Next, when you deduct abnormal loss, you will be getting cost of goods received by consignee. When abnormal loss is there, the units also will reduce. So it is 90, 46,350 at cost price. The invoice price value is 55,350. Then with that you will add non-recurring expenses of consignee. So what is this non-recurring expenses? 4,500. So how did you get this 4,500 is, so here, when you look into the question, they have mentioned what is Ramesh. Ramesh took delivery of the remaining radio sets by paying 4,500, which is for freight. Freight is your non-recurring expenses. That is why you're adding here non-recurring expenses of consignee, both the sides 4,500. So at cost price, you will be getting 50,850, and at invoice price, you will be getting 59,850. No, less normal loss, you don't have normal loss, so it is nil. Abnormal loss in godown is also not there, so it is nil. So the goods available for sale is 90 and the total cost price is 50,850, and at invoice price is 59,850. With this you will minus the sales. So sales information is it given in the problem? Yes. If you read the problem, Ramesh sold 70 radios at rupees 800. So we want only the units here when you are calculating value of closing stock. What is the sale units? 70. What is the balance? 20. So through cross multiplication we can find out the value at cost price as well as at invoice price. So for 90, if it is 50,850, then for 70 how much is, I'm sorry, for 20 how much is it? Cross multiply. 20 into 50,850 divided by 90, you will be getting 11,300. In the same way, for 90 units, if it is 59,850, then for 20 units how much is it? So 20 into 59,850 divided by 90, you will be getting 13,300, which is for invoice price, your closing stock value. So this is how you calculate. So now the actual changes occur in the consignment account when we are preparing. So now let us get into the consignment calculation. So in the books of consignment account, two goods sent on consignment 60,000. How it is 60,000? At invoice price 100 into 600 it is, you will be getting 60,000 rupees. Next, expenses of consigner. So you will be writing it as to bank account, forwarding and insurance, which is 1,500. Then consignee's expense to Ramesh's account, freight charges 4,500. Then commission of Ramesh. So commission will be calculated on what? On total sales. So we will be writing who's selling the goods? Consignee. So by Ramesh account, sales proceeds. You have in the question the sales proceed which is given, rupees 70 radios at rupees 800. So 70 into 800, which will give you 56,000. 56,000 is the sales. So on 56,000, 7.5% is your ordinary commission, where you'll be getting 4,200. Then delicate commission is 2.5%. So on 56,000, 2.5% you'll be getting 1,400. Then you have in the problem the additional commission, which is 10% surplus sale proceeds over the invoice price. So 10% is more on the surplus sale proceeds. So it is 10%. So please change that, it is actually 10%. So how are you going to find out the surplus? So you calculated ordinary commission on sales and delicate commission. So you have got 1,400 and 4,200. So on the surplus, so you need to calculate what is the surplus amount. So here we get into the calculation. Calculation of commission on surplus sale proceeds. So what is that extra? So what is the sales proceed? 70 units at rupees what? 800 is the sales. So which will give you 56,000 less invoice price of 70 radios sold. So invoice price of 70 radios. So 70 radios which is sold at 800, you are getting 56,000. So what is the invoice price? 600 rupees. How many radios you are selling? 70. With the number of units you are selling, and the invoice price you will be taking. So 70 into 600 will give you 42,000. So if you see, the consignor is sending the goods at profit. From 500 is charged 100 extra, where 600 rupees, 100 rupees is more. But what consignee is doing, he is charging 200 rupees more and he is selling, isn't it? So for that he should get a commission, yes or no? I know it is not fair to add on profit and sell it to the customer, but according to business, both a consignor is earning a huge profit. Yes. So for that work, what consignee is doing, consignor will give him a commission. So that is what you are finding out. The sale proceed which is made by the consignor is 70 into 800. 70 into 800, which will give you 56,000. Now what is the exact invoice price? Less invoice price of 70 radios. Only 70 radios, because you're selling how many? 70. 70 radios where 70 into 600. 600 where did you get? Which states The invoice price was 600, so that difference. So 600. So 600 we are getting 42,000. So if you minus, the consignee has sold more than the value of the consigner. So he is getting how much? 14,000 extra. So this is the surplus. On this 10% will give you 14,000 is the surplus into 10% will give you 1,400, which is 7,000. So this is your this is your value or commission which is receiving on the surplus. So when you add up 4,200 plus 1,400 del credit commission and on the surplus sales commission, you'll be getting the total as 7,000. So here sales is done. Next you should record your abnormal loss. Abnormal loss should always be recorded at cost price. That is why we have divided into two columns. So by abnormal loss account, what is the cost price of abnormal loss? If you look into the column, in the cost price column, you have abnormal loss. The cost price for abnormal loss is 5,150. That is what you will be considering it here as 5,150. So it is at cost price. So next, when you will be recording the you will be recording the closing stock. So do you have closing stock in the problem? Yes. So what is the closing stock value, which is 11,300 for at cost price and it is 13,300 at invoice price. So we will take it at invoice price. Your closing stock we will take it at invoice price because we are passing adjustment entry for goods which is sent on consignment as well as closing stock. So we have one more item to be taken. So it will be by consignment stock account at invoice price 13,300. So after passing this, these are the general entries what we pass. So now we are going to pass the adjustment entry. That is for goods sent on consignment, one adjustment entry we will pass. So it is two goods sent on consignment and adjustment entry will be by goods sent on consignment loading charges. That is nothing but profit on goods sent. So what is the excess? The cost price is 500 in the question. You are selling it at how much? 600. The consignor is sending the goods at 600. So that amount, that difference amount should be adjusted in the consignment account. So goods sent on consignment, only on the stock you will calculate. So goods sent on consignment, so 100 into 100. 100 is the total quantity. 100 into 100 is the 100 is the difference. How did you get 100 price? 600 minus 500, that difference. So which will give you 10,000. You passed one entry. Do you have closing stock in this problem? Yes, you have closing stock. So for this closing stock, you will pass one more entry. Your closing stock is by consignment stock account. So it will be here as to stock reserve account. Here by consignment stock account, in your debit side you will be recording it as to stock reserve account loading, that is profit on closing stock. So what is your closing stock? 20 units. So what is the profit, extra profit what the consignor is charging? 100. So 20 into 100 which will give you 2,000 rupees. So this is how you are recording. So now you have got all your items. So two adjustment entries you have passed. Now we will find out what is the profit. So if you total up, your credit is more with 84,450. So the difference is 9,450. So this is your profit. Next, we'll be preparing consignee's account, which is as usual, is the same one. So consignee's account, Ramesh's account, to consignment, 56,000 is the invoice price, which is the sales which is made by Ramesh. Then the expenses of Ramesh, freight and insurance 4,500, commission what he is receiving total 7,000. In this problem no advance is given, so that balance will be paid to the consignor. So what is the balance? 44,500. How did you get 44,500? 56,000 minus 4,500 and minus 7,000, you will be getting 44,500. Then consignment stock account, you will prepare consignment stock account here. So it is nothing but I'm sorry, you will prepare the goods which is sent on consignment account. You will also prepare consignment stock account and you will prepare stock reserve account. So here, so in this consignment stock account, you will be showing up what is the closing stock at invoice price. So to consignment stock account, so it will be as by consignment stock account, so it will be recorded as to consignment account at invoice price, which is 13,300. So the balance would be carried down 13,300. So consignment stock account you are preparing here. You can also prepare goods sent on consignment account. So goods sent on consignment, it will be as by consignment. Please prepare that account as well. It is the same. goods sent on consignment account. Towards your credit side, you'll be recording it as by consignment account, the total value, that is 60,000. Then in your credit side, it will be as to the adjustment entry what you are passing. You will record it as to consignment. Then the remaining you will be transferring it to your trading account. So next in the books of consignee we are recording who's consignee Ramesh. So in his book we'll prepare consignor's account. So it will be two bank account. So here what is happening, credit sales as well as cash sales is made as per the question. If you read the question we will understand it. So in the question you have Ramesh sold 70 radios, 30 of them on credit basis, out of which proceeds of 3 radios set would not be recovered. So Ramesh is selling how many? 70 radios. 30 of them are credit. If 30 is credit, what is the remaining? The remaining is on cash basis. So we will showcase that. So in out of 70, 30 is credit, so 40 will be cash. So 40 into 800 will be 32,000. By credit, it will be 30,000 into 30 rupees, 30 units into 800. That is 30 radios. You'll be getting 24,000. So with that is expenses 4,500. That's consignee's expenses. Commission 7,000. So if you look, the balance 56,000 minus 4,500 and minus 7,000, you'll be getting 44,500, which will be paid to the consignor. Next, commission account. So Nishant is getting a commission. So Nishant's commission is total is 7,000. How is he getting that commission? So for the bad debts he is bearing, so that commission will be, so to consignment debtors account, where 800 rupees is the what 800 rupees is the loss where he is bearing. So three radios were not money for three radios were not given. So bad debts, three radios into 800, so he should get 2,400 where it is a loss for him. So out of the total commission of 7,000, 2,400 is a loss. So what is the actual profit, what he is enjoying is 4,600. So we will transfer that to your profit and loss account. So when you're preparing commission, if you have any bad debts what you are facing, you will deduct from your commission and transfer the exact profit what you have gained.